Hello students, welcome to all of you Shiksha 360. And today basically we have to discuss chapter number 1, part 3rd of PPP, that is banker customer relationship. So let's start. So now today basically we have to discuss some of the important relationship basically between the bank and the customer. So first of all we have to discuss regarding the bank as a trustee. Clear? First of all today basically we have to discuss regarding the bank as a trustee. So basically who is a trustee? Basically a trustee, it is a person. Clear? A trustee, it is a person or a firm that holds and administers. Clear? Basically, what is trustee? Basically, trustee, it is a person or a firm that holds and administers property or assets for the benefit of a third party. Clear? So, what is a trustee? Basically, a trustee, it is a person or a firm that holds and administers the property or assets for the benefit of a third person. Clear? That holds the property or assets for the benefit of a third person. Clear? For what? Basically, for the benefit of a third person. So trustees are required. Here bank it acts as a trustee. So trustees are required basically to make decision in the beneficiary's best interests and have a fiduciary responsibility to them, meaning that they act in the best interest of the beneficiaries to manage their assets. Clear? To manage their assets. Like, I will discuss just one thing, what they are saying, that like basically we are doing two things. Clear? Like SIP, systematic investment. Clear? Every month we will pay, and other one, that is the mutual funds in the lump sum. Clear? Basically in the lump sum we have to pay in a single. Clear? So it is a better, and basically agency basically controlling our funds, that is basically to give out the best output. Clear? To give the best output to us. Clear? It is to be done under the SIP. Clear? It is to be done under the SIP. And in the case of the mutual fund, basically all overall money. Clear? Overall all the money basically will be put up by us. Clear? And we have to be put the money as per like where we want. Basically we will put the money. Clear? So basically here the company basically which manage the SIP, it is acts as a trustee for us. Clear? Trustee for us. Clear? So this is just for a simple example. If a customer keeps a certain valuables or securities. Clear? If a person keeps, clear, basically if a person keeps certain valuables or securities basically with the bank. Clear? If a person keeps certain valuables or securities with the bank for safekeeping or deposit. Clear? If a customer keeps certain valuables or securities with the bank for safekeeping or deposits, a certain amount of money basically for a specific purpose. So the banker, besides becoming a bailee, it is also acts as a trustee. Clear? It is also acts as a trustee. With the help of this example, you are able to understand more. So basically, in the case of Subramaniam Pillai and others versus Pillai Central Bank Limited, clear? That is basically, this happens in the case like basically certain person basically deposited rupees 2000 each in the bank as a guarantee money to purchase the cars. Clear? So basically certain person deposit rupees 2000 each. Clear? Basically in the bank for what? Basically as the guarantee money to purchase the cars. Clear? In the bank as a guarantee money to purchase the cars. But the bank failed before they could get the vehicle. Clear? The bank failed before they could get the vehicle. Clear? That is the bank failed. And what will happen? That is the bank is not able to refund back the money. Clear? So the court was of the view that the bank acted as a trustee. Clear? Why the customers or person deposited money? Because they trust the bank. Clear? That is they will get their money. Clear? Back. So the court was of the view that the bank acted as a trustee and the money should be refunded as the preferential debits. Clear? And the money should be refunded as the preferential debits. Clear? So here, why this is the view of the court? Because here the bank acted as a trustee. Like all of you are aware regarding one, that is Freedom 251. Clear? This is a basically we can say that basically I think 10 to 12 years ago basically there is a launch of the Freedom 251 mobile. That is everyone basically will get the mobile basically within of 251 rupees. Clear? Of 251 rupees. Clear? But later on basically it was declared as a scam. Clear? Because no one get the mobile. Clear? So here that company basically will not act as a trustee. Clear? So hope you are able to understand basically what is the meaning of the trustee. What is the meaning of the trustee? Clear? That is basically in the end they have to pay the money. Clear? That is the bank will pay the money. Clear? Like here in the even in the case of the failure, the bank will refund the money to all the customers. Clear? The bank will refund the money to all the customers. So here this is the meaning of the Bank acts as a trustee. Now, so in one case, a customer remitted money. Clear? In one case, a customer remitted money basically for the purchase of shares of a company. Clear? In one case, basically a customer remitted money basically for the purchase of shares of a company. The bank bought the shares in parts, but before completing of the rest of the purchase, it failed. Clear? The bank basically bought the shares basically in parts, but before completing the rest of the purchase. Clear? But before completing the rest of the purchase, the bank is failed. Clear? Or basically it failed. It was held that the bank stood in the position of the trustee and the remitter was entitled to the refund of the unspent amount. Clear? And here that is the remitter. The person basically who is going to purchase the share, that is was entitled. Clear? That the remitter was entitled. Clear? That the remitter was entitled to the refund of the unspent amount. Clear? That the remitter was entitled to the refund of the unspent amount. Clear? To the refund of the unspent amount. Clear? So kindly remember this point. That is bank acts as a trustee. Next one, that is Bailee Bailor relationship. Clear? Next point, that is the Bailee Bailor relationship. So here bank acts as a Bailee and the customer acts as a bailor. Clear? Basically in which case? Clear? Basically which case bank acts as a Bailee and the customer acts as a bailor. Clear? So like when a customer, clear? Basically when a customer deposits a certain valuables. Clear? Basically when a customer deposits certain valuables, bonds, securities or other documents with the bank. Clear? Basically when a customer basically deposits certain valuables, either certain valuables, second one that is bonds, third one that is securities or other documents. Clear? When a customer deposits certain valuables, bonds, securities or other documents with the bank for their safe custody. Clear? Basically for their safe custody. So besides becoming as a trustee, which we have already discussed, clear, bank also becomes a Bailee. Clear? So basically bank also becomes a Bailee and the customer is the bailor. Clear? The customer is the bailor. Clear? That is basically who is keeping your document. That is basically, or we can say that your valuable, that is to be known as the Bailee, and whose documents are to be kept or valuables are to be kept, that is known as a bailor. Clear? Very, very important. That is who is Bailee and who is bailor. That is when a customer deposits a certain valuables or bonds or securities or other documents. Clear? Or bonds or securities or other documents with the bank. Clear? With the bank basically for their safe custody. The bank, besides becoming a trustee, also becomes a Bailee and the customer is the bailor. Clear? Customer is the bailor. Clear? Further, according to the terms of section 148, please remember these sections. You will get the questions from that. According to the terms of section 148 of the Indian Contract Act 1872, kindly remember that Indian Contract Act basically it is 1872. This we have to discuss 3 times more. Clear? The bank becomes the custodian of the securities of the customer and hence a Bailee is liable for any loss caused to the bailor due to its negligence. Clear? So basically here, what the bank, it says that the banker is liable. Clear? That the bank is liable if anything happens. Clear? If any loss it is happens to the bailor. Clear? That is to the customer due to its negligence. Clear? Basically due to its negligence. Okay, so kindly remember this point. Clear? Kindly remember this point. Now move to the further. The finder of the lost goods. Clear? The finder of the lost goods as per the section 71 of the Indian Contract should return an increase in goods or animals to the true owner. Clear? The finder of the lost goods should return an increase in the goods or animals to the true owner. Okay. Under section 164, the finder has to take care of such goods as an ordinary prudent man. Clear? As an ordinary prudent man. Clear? Like we have to return the goods to the true owner and basically we have to take care of the goods as it seems to be our goods. Okay. As we take care of our goods, we have to take care of the goods which we have find. Clear? That these are some of the examples of the Bailee-Bailor relationship. Okay, kindly remember all these things. And when the bank acts as a Bailee, like in the case of the deposits of the certain valuables, in the case of the deposit of the certain valuables, bonds, securities or other documents. Clear? Certain valuables, bonds, securities or other documents. Okay, kindly remember regarding all these points. Next one, that is agent principal relationship. Clear? So here bank acts as an agent and customer is the principal. Clear? So agent principal relationship. In the case of the agent principal relationship, bank acts as an agent and the customer is principal. Clear? And the customer is a principal. So here, what we have to discuss, please remember that in the case of Bailee Bailor relationship, section 148 defines, and here that is agent principal, that is section 182. Clear? Section 182 of the same act, that is Indian Contract Act. Just replace the 7 here. Clear? Just remove 7 here, rest it is same. So according to section 182, okay, according to section 182 of the Indian Contract Act, clear? According to section 182 of the Indian Contract Act 1872, a principal, it is a person. Who is a principal? A principal is a person who delegates authority to another person, namely the agent. Clear? Who delegates authority to the another person. Clear? Who delegates authority to the another person, namely the agent. Okay. So according to section 182 of the Indian Contract Act 1872, a principal is a person who delegates authority. Who delegates authority to another person, namely the agent. Clear? Namely the agent. Among the ancillary services, rendered or provided by the bank, okay, among the ancillary services rendered by the bank are the remittance. Clear? What are the services? Among the ancillary services rendered by the bank are the remittance. Second one, that is the collection of checks, bills. Okay, among the ancillary services rendered by the bank are the remittances, collection of checks, bills to pay regularly, electricity bills, telephone bills, insurance premium, club fees, etc. on behalf of the customer. Clear? All these services are to be provided by the bank. So here, as from the services, we are able to understand these are the services, that is basically in these services, the bank is considered to be as the agent and the customer is the principal. Clear? Because all these services are to be provided to the customer. Clear? To the customer. In these cases, the bank acts as an agent. Clear? In these cases, the bank acts as an agent, his principal being the customer. As per the order of the principal, the bank will perform the function. The relationship of agency terminates. Okay, the relationship of agency, basically when it terminates on the death, insolvency, and lunacy of the customer or on completion of the work assigned. Okay, so the relationship of the agency terminates on the death or insolvency and lunacy of the customer or on completion of the work assigned. Okay, or on completion of the work assigned. In the case of remittances, further, that is in the case of the remittances, through the relationship it is of agency. In the case of remittances, through the relationship it is of agency. In the case of Trader Bank Limited versus Cleansing, the High Court has held that the relationship it is to be of debtor creditor. Clear? Debtor creditor. Okay, that is basically in the case of the remittance, like bank is doing the services, providing the service, but the High Court states that this is the relationship that is of the debtor creditor. Clear? Debtor creditor. Like in the case of the remittance, this is the special case. Okay, this is the special, like we can say that some exemption, this is one of the exemption here. Clear? This is one of the exemptions here. Kindly remember that. So this is the case which we have discussed. 3 points we have covered. First one, that is bank act as a trustee. Second one, that is Bailee Bailor. Here bank it is a Bailee and customer it is a Bailor. This is the case of the certain valuables, bonds, securities or other documents. Third one, that is the agent principal relationship. Clear? Third point here, that is the agent principal relationship. Now move to the next one. Lessor and lessee. Clear? Now move to the next one, that is the lessor and lessee. Here bank acts as a lessor and customer acts as a lessee. Clear? Customer acts as a lessee. So what is covered under that? Now let's start discussion. Section 105, further, that is section 105 of the Transfer of Property Act. Section 105 of the Transfer of Property Act deals with the lease, lessor and lessee. The bank provides safe deposit locker. This is basically in the case of the locker. Kindly remember that this is case of the locker. The banks provide safe deposit lockers to the customers for use on lease basis, that is on yearly basis. The relationship here, it is that of the lessor and the lessee, or of the licensor and the licensee. Clear? Or of the licensor and the licensee. Clear? Here, who is the lessor? That is the banker is the lessor and the customer is the lessee. Clear? Customer is the lessee. Further, the bank shall not be liable. Further, that is the bank shall not be liable for any damage or of the loss of contents. Okay. The bank shall not be liable for any damage and or loss of contents. Clear? The bank shall not be liable for any damage and or loss of contents or locker arising from the natural calamities. Clear? The bank shall not be liable for any damage and or loss of contents of locker arising from the natural calamities. Clear? Arising from the natural calamities or acts of God, or acts of God like earthquake, floods, lightning, and thunderstorm, or any other act that is attributable to the sole fault or negligence of the customer. Clear? So in these cases, the bank, it is not liable, like basically like in the case of the locker. Like we have to discuss, like in the case of the locker, customer forgets to lock the locker. So here the customer will be liable for that, not the bank. Clear? So kindly remember these things. That is, these are the points. Just I will give you one of the example. Clear? That is, the bank shall not be liable for any damage or any loss of contents of locker arising from the natural calamities or acts of God like earthquake, floods, lightning, and thunderstorm, or any act that is attributable to the sole fault or negligence of the customer. Bankers shall exercise, further, that is, bankers shall exercise appropriate care for the protection of their locker system. Bankers shall exercise appropriate care for protection of their locker systems and premises. Clear? For protection of their locker system and premises. It has the responsibility. Clear? That is, the banker has the responsibility. It has the responsibility to ensure that incidents like, clear, it has the responsibility to ensure that the incidents like fire, theft, clear, that the incidents like fire, theft, burglary, robbery, dacoity, building collapse do not occur in the bank premises due to its shortcomings, negligence, or by any act of omission or commission. Okay. So bank shall exercise appropriate care for the protection of their locker system and premises. It has the responsibility to ensure that the incidents like fire, theft, burglary, robbery, dacoity, building collapse do not occur in the bank premises due to its own shortcomings, negligence, and by any act of omission or commission. I think all of you are aware regarding that. Basically, last year in the Shimla, in Himachal Pradesh, there is one branch. I am not remembering the name. I think it is Bank of India or any other bank. One public sector bank branch collapse during the rainy season. Clear? During the rainy season. Clear? So that is basically, it is comes under the act of God. Clear? That is during the rainy season due to the floods. Clear? That branch will be goes on. Clear? So it depends upon case to case. Clear? That is comes under the natural calamity. Okay. So in instances where loss of content of locker, clear, in instances where loss of content of locker is due to such incidents or attributable to fraud committed by its employees. Clear? If there any incident is happened, that is basically why the fraud of the employees, fraud committed by the employees. So bank shall liability, clear, the bank's liability shall be for an amount. The bank's liability basically shall be for an amount equivalent to 100 times the prevailing annual rent of the safe deposit locker. Okay. So what is the liability in that case? That it is basically equals to the 100 times the rent. Like we can say that if the rent is of 2100 annual, so the liability, that is basically it is 2,10,000. The liability for the bank in that case, it is to be 2,10,000. Clear? The liability of the bank in that case, it is to be 2,10,000. Hope this point it is clear to all of you what they want to say here. Okay. That is, if there is any very, very important point, that is up to how much times The bank will be liable, that is 100 times, clear, that is 100 times the prevailing annual rent of the safe deposit locker, clear, of the safe deposit locker. Now move to the next one. Indemnifier and indemnified, clear. Indemnifier and indemnified, who is considered, like there is, like we can say that, I will take you the example of the insurance company. So insurance company, that is, they are providing you the insurance for any mishappening, clear. They are providing you the insurance or they will give you the claim. So here, basically it is going on, you are getting protection, clear, you are getting protection. So you will be indemnifier. And who is giving protection to you, that is indemnified or indemnity holder, clear, indemnity holder. They are taking the premium for you for providing that. Okay, similarly, a contract by which, clear, a contract by which one party promises, okay, a contract by which one party promises to the other, promises to save the other from the loss caused to him. Okay, a contract by which one party promises to save the other from the loss caused to him by the conduct of the promiser himself. Save the other from the loss caused to him by the act of the promiser himself or the conduct of any other person. Okay, by the conduct of the promisor himself or the conduct of any other person, it is a contract of indemnity, clear, that is to be known as the contract of indemnity. And it is as per the section 124 of the Indian Contract 1872, clear. And the contract of indemnity, basically we have to study as per the section 124 of the Indian Contract Act 1872. Okay, in banking, such a relationship occurs in the transactions of issue of the duplicate demand draft. Like one thing I will tell you, all of you are aware regarding the indemnity bond. Indemnity bond, like if any customer visits a bank, that is the person lost his FDR, that is fixed deposit receipt. So what you will take to issue before issuing the duplicate FDR, that is you will take the indemnity bond, clear. In case in future, if anyone finds that, so you have already taken protection from the customer, that is customer is responsible for that. Okay, so in banking, such a relationships occur in transactions of issue of the duplicate demand draft, clear. In banking, such a relationship occurs in transactions of issue of, clear, in transactions of issue of duplicate demand draft, fixed deposit receipt, etc. Clear. In banking, such a relationship occurs in transactions of issue of duplicate demand draft, fixed deposit receipt, etc. In these cases, the person availing the facility, clear, in these cases, the person availing the facility will compensate the other, clear. In these cases, the person availing the facility will compensate the other for any loss, clear, will compensate the other for any loss arising from the wrong or excess payment, clear, arising from the wrong or excess payment, clear. So in banking, such a relationship occur in transactions of issue of duplicate demand draft, fixed deposit receipt, etc. In these cases, the person availing the facility will compensate the other for any loss arising from the wrong or excess payment. Okay, will compensate the other for any loss arising from the wrong or excess payment. That is the indemnifier and indemnified, clear, indemnified. Okay, so who is, that is here bank is to be indemnified and the customer is indemnifier, clear, customer is indemnifier. I think I will write it here wrong, clear. Insurance company, it is basically giving the protection, clear. Insurance company, basically it is giving the protection, clear. So insurance company, here it is indemnifier, and basically the person basically who is getting protection, that is indemnified. So in this case, the bank is indemnified, taking the protection from the customer. In the, like we can say that in the case of the duplicate demand, just they will take the indemnity bond from the customer, that in case if anything happen, so the customer will be liable for that, customer will be liable for that. Okay. So these are the relationships. The banker customer relationship are summarized. All these relations we have discussed, like something like pledge, we will cover later. Clear? Hypothecation, like in the case of the vehicle. Okay. So deposit in the bank. In the case of the bank, that is, this is the bank and the customer. So bank, it is a debtor, and customer, it is a creditor, because in the case of the deposit. Loan from the bank, here bank will give the money, so bank, it is the creditor, customer is the debtor. In the case of the safe custody, we have already discussed, bank, it is a bailee, and the customer, it is a bailer. In the case of the locker, bank, it is the lessor, and customer, it is the lessee. Collection of a check, bank is providing the services, so on the, as per the order of the customer, that is bank, here it acts as the agent, and the customer, it acts as a principal. Purchase of a draft, here bank, it acts as a debtor, and the customer, it is as a creditor. Clear? Purchase of a draft, it is a, we can say that it never bounces, because it is a prepaid instrument. Clear? It is a prepaid instrument. Okay, so here, that is bank has to give money. Clear? For that, clear, whenever it will be put in the clearing, so bank has to entertain that, because it is a prepaid instrument. So payee of a draft, that is trustee and beneficiary. Pledge, bank here acts as a partner, and the customer who keeps their goods to the in the bank, that is pani. Mortgage, bank, it acts as a mortgagee, and the customer whose property is going to be mortgaged, that is to be known as a mortgager. Next one, standing instruction. Clear? As per the instruction of the customer. So the bank here acts as an agent, and the customer, it as a principal. Similarly, on the sale purchase of the securities on the behalf of the customer, bank here acts as an agent, and the customer acts as a principal. Next one, money deposited. Money deposited, but instructions not given for its disposal. That is, bank acts as the trustee, and the customer beneficiary. Clear? Similarly, articles left by the mistake, so it is, we can say that as a responsibility of the bank to take care of that. That is same, that a bank acts as a trustee, and the customer as a beneficiary. Next one, that is share givens for the sale. Here bank acts as an agent, and the customer acts as a principal. Hypothecation, bank acts as a hypothecary, and the customer acts as a hypothecator. Clear? Hypothecator. Clear? So hope all the important points regarding the banker customer relationship you are able to understand. Okay. Like bank is indemnified or indemnity holder, and customer is the indemnifier. Customer is giving the protection. Clear? Customer is giving the protection. Here I think I will said wrong. So here insurance company, that is giving the protection, and the customer is getting the protection. Clear? Customer is getting the protection. Clear? Here in the case of that. Okay, so customer is to be indemnified, that is indemnity holder protection. Okay, I think earlier I have explained wrong, so kindly please correct it. Okay, so lesser lessee, agent principal, bailee bailor, and bank acts as trustee. Hope in this session we have to discuss up to this much point. Hope all the points whatever we have discussed today, it is clear to all of you. If you have any doubt, any query regarding any point, then you can ask your doubts. And thanks to all of you for joining this session.